Assalamualaikum and hello everyone. This is the second part of the video involving preparation of financial statement using sample finalism question February 2021, and we have done the workings part, and now we're going to proceed with this requirement, which is to prepare the statement of profit or loss, statement of changes in equity, statement of financial position, and also the following required notes to the above financial statement. So let's do that. We start off with A, which is statement of profit or loss and other comprehensive income. So what you need to do first is to prepare the blank template. Of course, you have done that. And the first item that you need to do is that the revenue has to be adjusted. So the revenue was actually from the income, which is the first item in your trial balance. So just take that and go and add with the adjustment or adjust for the adjustment that you have done for the information number 1. So you have done that earlier. The revenue was being overstated, and therefore you have the figure here to be it would be this figure 429,066,4670. Sorry. So cost of sale. So cost of sale, take the one as per the trial balance. Take the one here. So we have taken this and go and adjust with the write down of inventory. So if you do that, you have this figure, and your gross profit would be this. Next is the other income. So other income would be either from gain on disposal. You don't have gain on disposal here, but you do have gain on the fair value change of IP, if you can still recall. The gain on the fair value change of IP is this gain here, which is 200,000. So include that here. Next is the admin expenses. So go and show the workings for admin expenses as per the trial balance. This is the amount. Go and check your trial balance. Director's remuneration, no adjustment. Loss on disposal. So this loss on disposal is actually from the adjustment that you have done on the replacement of the machine. This is the one that you are going to include there, which is 648,648, and therefore that loss should be adjusted here, included. And you also need to include your deficit. Deficit is from the adjustment that we have done much earlier, which is the second revaluation for our land. So that deficit here is the one that you will have to adjust and include as part of the item here under your admin expenses. Why? Because the remaining deficit was already debited to the asset revaluation reserve. Whatever could not be used in terms of being debited to the ARR of land will be adjusted directly to the expenses, charged as an expense. Depreciations. We have done the calculation much earlier, so go and check the amount for building. 150 is from the adjustment 3B1, and 140 is from the adjustment 5.3. Go check them. Depreciation of machinery, we have already done the calculation, and that would be 361,347. That was from these workings, this yellow workings I've shown here for current year depreciation for machine. Done. Now you have the total 92,039,347. That was for the item admin expenses. For the distribution cost, no adjustment. So now we can proceed with finding our operating profits, and then our finance expenses, which is also known as the finance expenses are also called finance costs, like the debenture interest. So if you check your finance costs, that was actually given in the trial balance. Go to the trial balance. Your trial balance 2430. And your investment income are mainly from dividend and interest income. That was from here. Okay, this item too, which is finance expense, and this is the income. So we have already checked all that. Now go to the profit before tax. Your profit before tax would be 80,047,123. The income tax expense, that should be as a result of your 5,005, which is given in the question. You can straight away take that here, which is given 5.5. But bear in mind there was also some tax payable, because the tax paid was actually 4 million and you have actually underpaid, so you need to pay more, so that tax payable will be charged later in the current liability. Other comprehensive income. For the other comprehensive income, you will report 400,000. That 400,000 is the revaluation surplus of the building, which is the building here, this one, the first revaluation. Remember, the revaluation surplus that you have earlier for your land has already been reduced by 500,000. So that is completely gone, and what you're going to show is just the current year amount. So the current year amount is just relating to the item on revaluation of building. Land won't appear here. If you have, yes, of course, first you have, but the point is that was for the current year, and in current year that is no longer there. So 400,000, and the other comprehensive income profit for the year would be this. Okay, profit for the year 74,547,123, and this is your other comprehensive income. Then prepare your statement of changes in equity. Put the first row, which is showing the balance. Make sure to show the ordinary share, asset revaluation reserve. I'm actually showing the impact of the asset revaluation reserve as a total. If you were doing separate T account, or if you are doing your journal, it should be done in a separate account for land and separate account for building, the asset revaluation reserve. But when you put this in the statement of changes in equity, it will total up all the revaluation reserve coming from different land and building, and you will total up here, and you will have the list of accounts that will show accounts detail relating to asset revaluation reserve. Okay, don't worry so much. At the beginning of the year, there was some balance of the reserve. This is the one relating to land that was given in the question. This one. Asset revaluation reserve relating to land. This 500,000. Okay, that 500,000. Therefore, that will be included here. Right. You will have to show here. Then the first item that you need to adjust is this, to reduce the revaluation reserve balance, since the deficit is there. So you need to go and utilize the deficit first, the 500,000. The remaining 200,000 is the one that you debit to the expenses. So I'm focusing on that. And for the building, the new revaluation surplus is 400,000. So at the end, you will have an amount of 400,000. Right. For the retained earnings, bring the item that you have, which is you can put a profit for the year, no dividend whatsoever in this question that were included in the trial balance. Go and check your trial balance if you have any dividend. No, you don't. You don't have those items, right? These are done. We have taken this retained earnings. We have also taken the reserve here, right? Next is for us to proceed with the rest. And your share capital, no changes to the share capital. If you have bonus issue, you have right issue, you have any let's say any purchase of new shares, share retirement method, treasury stock method, whatsoever, you may have to consider that, right? If you have any let's say prior year adjustment, you also need to consider that as well, or anything related to prior period error, changes in accounting policy, you need to adjust some of this column perhaps. Okay, then these are the items that you have done, no problem. So let's look at the first item, where those things that you have done here, I would suggest you put straight away in the share capital and reserve column. Take them. So the total here, 508,797 will be the total here. This reserve column will be all column except L ordinary shares, 400 plus 176397123. This is the amount. 332 is the share capital, ordinary share capital. Right. The retained earnings and reserve will give you the figure 176,797. Can now I proceed with your PPE. To get that, we will do it later. We'll do the investment first. We'll do that later. But let me just show you what should be the amount. 32,112,123. For the investment, just take the item that you have here for the investment, which is this. And then your property, plant and equipment, you won't take this because you need to go and consider the adjustment on depreciation, on revaluation, yeah, and also on the transfer that has taken place. Next item is your investment. So there are no more investment property. At first, there was an investment property, right, which is the amount that you have here, the investment property of 4 million. But if you look at the adjustment that we have done much earlier, the investment property has already been transferred in terms of its use. So there is no more investment property because that has been reclassified as a PPE. So there is no investment property. I have already done the adjustment showing why. Next is the inventory. The item inventory must be written down. Must be written down with the amount of write down, right? For the 5,000. This is the write down amount. Write down. I put here write down. Okay. Write down. Okay, write down. Okay, don't just ignore that. Next, trade receivable. Trade receivable before the changes, but you need to consider your sales that has been overstated. Remember the revenue, the first item here that were not even delivered, but you have already declared that as a sale, so that has to be adjusted, and that was also adjusted in the section related to trade receivable. And this 250 is actually the allowance for the bad debts being written off. So this is the bad debts written off. Remember, we did it here. Bad debts written off under allowance method, which is our earliest, one of the earliest adjustment, this figure here. So that has to be adjusted by crediting the trade receivable. We have done that. Now you have your allowance for impairment of trade receivable. The amount that has to be shown here should be 1.55. Remember, this is the balance given in the trial balance. This is the balance given. Okay, so therefore inventory done, trade receivable done, and the PPE is the one pending, share capital done, long-term loan not yet, and the trade receivable not yet as well. So let's go and do it. It will be very fast. The cash at bank, there will be some changes for the cash at bank, and that was because there is a component being purchased, the replacement of component, and with that you will have the item here 183,565. This is the adjustment related to the purchase of component, PPE. Yeah, the PPE item that was here, the one that we did much earlier here. the old component was replaced by you purchased with a new one. 3C2. So we can write here 3C2. Let me just put here for you. 3C2. Okay. That was the amount that was being adjusted. Right. Next, therefore, that is the balancing figure. Long-term loan, no adjustment. No adjustment, just as it is, because finance expense has already been provided. That have also included maybe loan on, there were loan interest on that. Okay, trade payable, no adjustment. So let's just do some checking here. So trade payable, long-term loan done. And trade payable was somewhere, where was it? Here, yes. And this is our, so we are done with most of the things. And we're going to do our PPE, and we're going to check on this part. How much? This is not the one here that you will take. This is the total as at the beginning of the year, which includes cost minus accumulated depreciation, the carrying value at the beginning of the year. Done with that, let's look at our PPE section. Okay, no other things. Total equity and liability. For the PPE section, the figure that I was telling you just now is the figure which is going to be the amount here. Let me just show you the figure here, which is 28,911,470, beginning of 1st July, and this is the one here actually, beginning of 1st July 2018, where you will total up and you will see that the carrying amount would be the amount, the total that you have there, 1st of July 2018. Okay, this is the one. The total here should be the total here. So this 1, 2, 3 should come back to this figure, 28,911,470. Is that the figure that we will be doing? No. We're going to prepare our movement of PPE. So you should have 3 columns for the item and 1 column for the total. The first one is the cost figure or the valuation figure. Where do you pick up that? That would be from the previous PPE notes. So that you just take the same item. Where is it? This is the one. 7.53 million. Just take that. For the machine, it would be different. Okay, because this is the figure. Sorry, 1, 2. Take the one at the end of the year. 18.5, 7.5, and 5.1. Put it here and get the total. Next, surplus. There is only surplus that you have was the surplus on building, 400,000. Deficit is related to land, 700,000. Of course, 500,000 was already being debited to the ARR of land. 200,000 was debited to the profit or loss. Addition here is the new addition for the new component of machine. Disposal here is the replacement of the old component. Transfer here is the carrying amount that has been transferred, 4.2 million. Because now it is no longer an IP, it is an item of PPE, and that's why building has been increased by 4.2, because the item building was used now as a warehouse, which is one of the function of PPE. These are the things that you need to adjust, which is the depreciation adjustment that we have done much earlier, 900,000. Remember, I was showing in the detail on that here, 900,000. This figure here, 3B2, right? maybe you can put a note so that you can have an easy reference. So this one is 3B2. I put here 3 just for working purpose only. B2. Okay, that is the balance at the end of the year for the cost or valuation figure. Remember, building was a valuation figure, land was also a valuation figure, machine was at cost. The end of the year, beginning of the year, the depreciation. The depreciation that you have here is the one from here, 18, which is the total accumulated depreciation, 750,143,8,530. So we put that as the beginning balance for the current year. The disposal is the disposal item 152. This is the one that we have debited our accumulated depreciation account when we were doing our replacement of old component. This was the one. C3C1, you can write down 3C1 for your easy reference. 3C1, I put here 3C1 for you to have a better idea of what you are doing. Remember, we are taking this as a learning. We're not trying to have any timing of how long are we taking this to do it. I'm trying to explain things step by step. So it might take longer than what you may use in your be doing it in final exam. Okay, 152, we're almost done. So charge for the year is the depreciation that you have included in the workings for admin expenses. Remember, when we work out admin expenses, we also include the workings for depreciation. In case there are some of the item that is under distribution cost, also include that. So here you have the depreciation 290,361,347. Put that in your schedule here. Elimination is the same thing that you eliminated earlier, 900,000. Then you have the total for the accumulated depreciation at the end of the year. You have the total for the carrying amount, and this is the amount. This is the amount that will be transferred here, or has been transferred, and the breakdown is in the schedule. The last item is just to copy the capital commitment information. With that, I thank you for watching. Go and repeat by doing other questions so that you get more expert, and practice makes perfect. With that, I thank you again. I'll see you when I will see you. Have a nice day ahead.